This is InvestTalk. Independent thinking, shared success.
Hey, I want to know about Marvel Technology, ticker symbol MRVL. We just had earnings. The stock has dropped substantially. Wanted to see if this would be a good time to pick them up. Maybe hold it for a few years. Wanted to see what your guys' thoughts are. If that's 74 right now, if that's not the price, what you guys think a good entry price would be. Thanks for what you guys do. Looking forward to hearing on the show.
All right, looking at Marvel Technologies, and they did have earnings, and earnings disappointed, even though revenues were up 27%, earnings were up 30%, but it's always about what the future looks like, and future looks not as rosy as the market had been expecting. Earnings this year expected to go $2.81 from $1.57 last year, and that's a big jump. And that's what the market has priced in with this big move from 34 back in beginning of 2023 all the way to 120 recently. 52-week high is 127.48. Now we're down to 72. So we're down 43% from its 52-week high. And just look at the history of the moves in this name. Back in 2021, it peaked around $93 and it bottomed around $34. Okay. So you're talking about roughly about a 65% drop, peak to trough. And if you head back to 2008, it peaked out at about $36 and it bottomed around $5. Okay. Down around 80% from there. And that's typically what happens with these names. You get a 60 to 80% sell-off. Okay, so a 60% sell-off would bring this all the way down to $50, around there. An 80% sell-off would bring you down to, the mid to high 20s. Which, frankly, the 200-month moving average is around $28. Would it shock me to get there? No. I mean, as I said, its earnings expectations for this year are $281. It could easily not make that, right? This is a semiconductor company. If the demand in the data center space, which they sell a lot into the data centers, and that's been a big boon for their business. If that doesn't come to fruition, this could easily only make $1, right? And then suddenly, what are you going to pay for $1 or $1.50 in earnings when earnings are falling instead of growing, right? You're not going to pay a big multiple, especially for a business that is not very consistent. So I think there's a lot more downside to come. I don't see really any major support here until probably $45 in that range. It's at 72 now. So, it's a name at some point you probably want to pick up because the history is they're fairly profitable. They do have a lot of debt. So I would not be buying Marvel and stepping in front of this. Okay. Let's go take a live call. Nick in Seattle looking at URI, United Rentals.
Yeah. Hey, Justin.
Hey. Do you own it or looking to buy it?
Yes. Yeah, I have about a half a position. I've averaged into it over the past year, so I'm about even money on it. I'd like to add a little bit more, but before I do, I would love to get your analysis and see if you like the company and if you think this is a good point to add a little bit more.
Well, United Rentals, for everyone else out there, they provide construction and industrial equipment rental sales through about 1,600 locations in the U.S., Canada, and Europe. Now, this could be an issue with tariffs, right? If they're operating in the U.S. and Canada, then there's products going across the border. What does that look like? That would be a bit of a worry for them. Revenue growth looks to be slowing this year from last year. Same with the earnings growth. Earnings supposed to go up 4% this year when they went up 6% last year. And those estimates for this year and next year continue to come down. So, and that's why it's in a downtrend. It's 30% off its 2-week high. It's below all the major moving averages. And historically, this is a cyclical name. And they tend to let me look at their debt levels right now, right? This is a highly capital intensive business. They rent equipment to their customers. And in an environment of higher interest rates and maybe a down economic cycle, that could suddenly be a challenge for them. Now, their cash flow peaked out in 2021, everyone was building, especially apartments and people remodeling, all of that. Now it's down to 419 million. So certainly that's come back down to earth. Their profitability is very good. It's 30% return on equity. I like that. Solid dividend. The issue is the cyclicality, right? And the trends here, which let me find a support level for you because that will be vital. Let me look at this. Just trying to run a fib on the chart. So yeah, major support's going to come in around $488. Right now it's at $625. So, it's approaching the 100-week moving average. That's going to be at 605. That's going to be decent support. But major support will be around the 200-week moving average, as well as the 618 retrace from this move from 2022. 488 would be that level I would want to be picking this up at. But I just don't like the recent trends in the economy, in earnings expectations, as well as the chart. So I'd be patient on picking up more until 488.
All right. Thank you.
Thank you for the call. Let's go talk to Don from Orinda, looking at Kela Nova. Symbol is K. Do you own it, or are you looking to buy this name? Looks to be bought out.
That's the real question. Yes, I own it. I see that Mars is looking at purchasing it. Mm-hmm. I don't see how much the owners of whatever they are.
Yeah.
I don't know what we're going to get for it. I don't see it.
The offer is $83.50 per share, $83.50. Right now it's at $82.43. So, if you wait until the deal closes, you'll get a little bit more. Now, there's obviously the risk that they could fall through as well. Now, it's an all-cash deal. They probably have the money. It's probably going to go through. There's probably very little risk that this will fall through. So, you're talking about a little over 1% gain from here on the buyout. When it closes, I'm not sure. I'd have to dig into it. But it's likely going to close and you'll get $83.50. But, you can also just sell it and put that money into something that might yield more as well.
Okay. Fantastic. Thank you very much.
No problem. Thank you for the call. Now we have another live call. Roger from the Bay Area asking about CGXU, listening via our podcast and occasionally listens on AM 1220 as well. CGXU is the symbol. Once again, do you own it or looking to buy it?
I'm looking for it. So basically, I allocate 20% of my portfolio to international stocks. And mostly I've been with the VXUS so far. But that is market weighted, and I felt there's a need for some active management over there, given the situations we are in right now. Mm-hmm. And I came across CGXU. It's from Capital Group. They are known for their active management. And so I was thinking, how about putting up like 5 to 10% of my international allocation into this ETF? So I'd like to know your take on it.
Well, this would be a large cap growth ETF, foreign large cap growth ETF. 93% of the portfolio is invested in foreign equities. And like I said, leaning towards the growth side of the market. So, depending on how those other type of businesses or ETFs, how they lean, this could be a good diversifier. Now, this is an environment where you're starting to see the growth side of the market underperform once again, but how much of that is just the Mag 7 underperforming versus the other kind of smaller caps? I haven't looked at that in a second, so I'd have to take a look. But it would be a good portfolio diversifier. Now, it is a bit on the expensive side. 54 basis points is the annual expense ratio, but for a actively managed ETF like this, that kind of makes sense, to be honest with you. So as your sole way to get exposure to foreign markets, I'd probably say no. But as a once again, a portfolio diversifier, I would say yes. Now, if you look at the performance, however, it has been subpar. This year, it's up 6%, but the category is up 8.6%. Okay. And last year, it was up about a little over 4%. The category was up 5.18% on average. And in 2023, the first full year that it was in operation, it was up 15.75. The category was up 16.18. Okay. So it's been lagging a little bit the first couple of years. Now, not dramatically, it's just slightly below the average. And obviously this year it's actually lagging dramatically. So, one of the main reasons to invest in foreign markets is because it's a lot cheaper, from a multiple standpoint. And I think it's part of the reason why you're getting the outperformance in foreign markets is that you're getting money flowing back to those names that are a bit more value oriented. And this wouldn't benefit from that. But like I said, as a portfolio diversifier, as a small position of your foreign exposure, I don't mind it. But definitely wouldn't be the only way to gain exposure to foreign markets. Thank you for the call. Now let's keep things moving. Get a fresh question from the comment section over on our YouTube channel. Finite Anarchy says, can you take a look at Tempest AI? This came up in a monitor of stock trades in Congress. Apparently, Nancy Pelosi sold a chunk of her NVIDIA shares before it tanked on Monday and bought this on January 14th. Now it's got me curious because I've never heard of it before. Interesting. Okay. So following the Nancy Pelosi trade usually doesn't disappoint, but let's take a look at AI is the symbol. And this one is certainly disappointing. This is C3.ai. And what they do is they build enterprise scale AI applications for organizations in data intensive industries. This is a name that has lost money, continues to lose money, even though revenue growth is pretty solid. Not amazing, 26% year over year for a small name with $2.7 billion market cap and only about $100 million a quarter in revenue. That's frankly not gangbuster growth, okay? Now, if I look at the chart, as you would imagine with what's happening in the AI space, this has reversed in a big way. Let's take a look at January. Yeah, it was trading in the 30s, mid 30s. Now we're down to $21. So not all Nancy Pelosi trades work out. And, that's why you have to take those trades kind of with a grain of salt. But yeah, I wouldn't be buying this. It's now approaching major support here around $20. But with the kind of trends you're seeing within the tech space, as well as the fact that they don't make money, they're burning capital, this is the type of name you want to avoid until kind of the dust settles. And I frankly don't think the dust will settle on the reversal of the AI trade for a little while. I think it's just getting going. And a name that's, like I said, burning capital, issuing more shares to stay in business, then I wouldn't be jumping in front of this. So I'm passing on C3 AI. Symbol is AI.
We hope you enjoyed this video.
Please consider liking and subscribing so you can stay updated with our latest content. Now let's pivot back to the InvestTalk voice bank for a question that came in earlier from a listener in Florida.
Hello, Justin and Luke. This is Jim down in Miami Beach, Florida. I haven't talked to you guys in a while, and I'm calling today about Grindr, GRND. It's a niche dating site that has a unique client base, and fortunate enough to be in on it long at $5.60 a share. It's up pretty good right now, and I really want to get more of it, and was thinking with all this volatility and the broad dips in the market that it might be a good time to get more. If you could just give me a little bit of insight on how the company's doing and if it's worth investing more, I'd greatly appreciate it. Thanks so much, and I'll listen on the podcast.
All right, looking at Grindr, let me take a look here. This looks like a name that has been bought out. Yeah. So I don't think there's a reason to pick it up here. Yeah, it looks like a name that has been bought out. So interesting niche name. Actually, no, I'm wrong. It has not been bought out. I apologize. Let me take a look at the chart. The one chart looked like it was bought out. All right, so earnings were negative last year. They are rallying, or they're headed to $38 this year, to 56 cents next year, but it's still a $15 stock. So you're talking a 30 times multiple going forward, even more. Analysts' expectations for earnings next year and the year after continue to go down, and it looked like it just broke lower technically. So I probably would not be picking this up. I don't think it's cheap enough. Let me give you a price on this name. Just broke out down nicely today, down over $3. So certainly that is a problem. Let me give you a price. I would say, honestly, $10. I probably wouldn't own this till $10. I wouldn't be picking it up. In fact, it just technically broke. Usually when you get these high volume reversals from a high, this wants to go lower. And frankly, I would be selling it, and I would be maybe picking it up at $10. But I wouldn't touch it until then. Thanks for the call. Now we've got time, so let's fit in another caller question from the InvestTalk YouTube channel. Carter Erickson says, what do you think of IESC? IESC is the symbol. Let's take a look here. This is IES Holdings. They provide electrical data communications contracting services to commercial, industrial, and residential customers. And as you would imagine, this is a name that did very, very well because of the AI data center boom. They only made $1.79 in 2019. And last year they made $9.62. So a big boom for them. And this is another one where the stock has rolled over in a big, big way. So it looks cheap because of those earnings. But this is the market telling you that the whole DeepSeek news and just the expectations from a lot of these chip makers that the recent growth in demand over the last 12, 18 months is not likely to be sustained. This is telling you the same thing. So the technicals are broken, and this is a very small name, $3.3 billion market cap. And even last quarter, revenues grew 18%, but that is a stark slowdown from the 31% just a couple quarters ago. And earnings were only up 42%. Once again, a stark slowdown from peak when it was up 147%. So I don't think that this is going to maintain its momentum. And I would be very patient on it. These names could fall much, much more, even though it's already down about 50% from its 52-week high. There's not a lot of clarity on earnings going forward. And so I would be patient on it. Keep on your watch list because it could be a good buy at some point, but I would not be buying it now. Let's go take a live call. Sammy from San Francisco asking about Netflix.
Hey, Justin. Thanks for taking my call. I would like to get your view on a good entry point for Netflix. It's down pretty significantly today. Mm-hmm. Do you think this is a good time to get in, or wait it out a little bit?
Well, this is another one of those names that went down on big volume. Has had a massive run. This bottomed in 2022 around $167. Now we're even off. It peaked out around over $1,055 or so. Now we're at $906 per share. So to me, this is just starting its rollover. I don't see major support until about $600. Let me get you an exact number on this. Yeah, around $612, $615 in that range. That's where I might pick up Netflix. But I think this is just starting its pullback. If you have a broader NASDAQ drop like you did in 2022, Netflix then fell from $700 to $160. Like I said, when you get money, these are retail names, and when the retailers are out, remember they're weak hands. They sell, and that's why you get these massive drops in these names, 60, 70, 80, sometimes 90%, depending on the strength of the business, how much retail weak hands are in there. And I think Netflix is just one of those. And so certainly a name to have on your watch list, but this is just beginning, and it's trading at 50 times earnings. So to have this thing be cut in half to $450, would not shock me at all. So I would not be touching Netflix. I think there's much more downside to go, and I would pass on it, but keep it on your watch list. Now, real quick, let's fit another listener question from Derek Johnson, 5219, says, my question, would you say that Microsoft will continue to trade in this range between 400 and 450 despite its trading at a lower PE than other growth stocks? If you look at Meta, it was a smaller PE than other Mag 7s, and I think it's because they're hoarding cash for some big products they want to bring to market, want to spend on AI. What is your opinion on Microsoft going forward? Okay. Well, Microsoft certainly has the steadiest business. I always say, if you rank the Mag 7 names of quality of their business and strength of their economic moat, shall we say, I think Apple is clearly number one. But Microsoft is pretty up there as well. You know, Apple kind of has that lock on the consumer when it comes to the iPhone, the iOS ecosystem. Microsoft kind of has the lock on the business consumer and the Microsoft 365 ecosystem, shall we say. Now, Microsoft has pulled back, but it is at support right here at the 100-week moving average, right around $400 per share. And it was down about $4 today, about 1%. Certainly outperformed the broader Mag 7. Now, let's take a look at some of the numbers on Microsoft. And it's trading about 32 PE. So think about that. You're talking about that being the lower PE for a lot of the Mag 7. Still relatively elevated. Earnings expectations for next year and the year after, this year and the year after, are coming down, but still nice growth, 11 and 14% respectively. I do expect it to trade in a range. It would probably go through somewhat of a corrective period, especially if the NASDAQ goes down. You're going to get money flowing out of big tech, and you'll see weakness and sympathy. Will, I think, the Microsoft and Apples outperform the NVIDIAs and Netflixes of the world and Teslas of the world? Yeah, I do. In that corrective type period, you're likely to see that. And you can just go back to 2022. Microsoft was at 345 or so and fell to 219 at its low. So it didn't have the 50% plus pullback that the rest of the market had. It fell to the 200-week moving average, and that's where it found support. And, you know, could you have a repeat of that? Right now, the 200-week moving average is around 334. Obviously, it's going to go up as the weeks go on, but this heading back to 350 would not shock me at all. So I would actually put that range a bit wider, probably between 350 and 450 in that range. So that's what I would expect for Microsoft. Certainly should be on your watch list. I think it's a stronger name than a Meta, for example. But yeah, it's probably going through a corrective period that needs to happen. Okay. And I think the broader NASDAQ is going through a corrective period, very similar to 2022.
Explore additional content and tools by heading over to InvestTalk.com.
Hello, Justin and Luke. I'm calling today about Amazon, ticker symbol AMZN. Ignoring the PE ratio and looking at its EV to EBITDA, price operating cash flow, and price to book value, it looks undervalued compared to its 5-year averages. So given its increasing profitability and high growth potential in cloud business and advertising, I'm wondering if it will be a good purchase between mid 190s to low 200s. Thank you, and I'll be listening on the podcast.
All right, looking at Amazon, and I like that he's going beyond PE ratio. He's looking at other ratios that are more telling, and one is enterprise value to EBITDA, enterprise value to EBIT, and they are the lower end of its range. However, you know, you have risks that are bigger than they were before. You see this with tariffs, right? How much will the 20% tariffs impact the sellers on Amazon, for example? Okay. And so that's certainly one worry. And then, you know, there is something to be said about full earnings, right? It's not something you should just throw out completely. Okay. And if you look at sales growth, certainly slowing, 10% sales growth last quarter, down from 14 late in 2023. And then earnings estimates growth are slowing as well. And then the technical, right? P ratio is 38. If you look at the technicals, those are also breaking I've talked about this pretty much this entire show, that you're getting that weakness of the Mag 7. It's at the 200-day moving average for Amazon, which historically is good support. So it should hold here. If it doesn't, you're going to get a much broader pullback in Amazon. And in 2022, just for comparison's sake, that peaked out at about 185 and hit a low of about 82. So that fell over 50% from its 52-week high. Would not shock me to see something like that and get a more reasonable multiple in the low 20s is probably what Amazon really deserves. So I think there's much more downside for Amazon, and I would not touch it. Okay. Let's talk about the impact of the trade wars on M&A and deal making. Okay. And the trade war is certainly having a major impact, and this is coming from a Reuters analyst, and was interviewing 20 investment bankers. They're talking about M&A lawyers, private equity investors, hedge fund managers as well. Okay, so and what you're seeing is a larger slowdown that we haven't seen really since 2009. Okay, the pace of M&A in the first 2 months of 2025 was the weakest since 2009. Only 1,603 deals were signed through last Friday. Total deals fell 19%, and the total value of deals fell 29%. Okay, and really it's all about uncertainty. The executives that are running the numbers here don't know how to do it. What will tariffs be? How will that impact the companies that I'm potentially investing in or buying? And this is the top concern for U.S. corporate borrowers, according to S&P Global. And this is already weighing on the big investment banks. Goldman Sachs has already started to roll over in a big way. And these deals are just souring. Now, there is a view that over the medium term, under the Trump administration, it will reverse, that taxes will be lowered, regulation will go in the right direction, and that these M&A deals will start to pick up. But clearly, uncertainty is the enemy of getting any of these deals done, or most of these deals done. And I know this just from personal friends of mine that run businesses, and they're up in arms about the tariffs. They hate it. Some of them do import from places like China and Mexico, and it throws a giant wrench in their plans for the year, which they've been, spending the entire 2024 gearing up for. And so it's no shock that these deals, which are many of them are still in the pipeline, they're just not going through because they don't know how to run the numbers. Now, there is hope that big mega deals will come down the line, but that may not be until later in Trump's presidency. Now, I'm Justin Klein. This completes another InvestTalk program. We thank you for listening. We encourage you to tell your friends and family about our free podcast downloads, which you can find anytime at iTunes, Spotify, or Google Play. And be sure to rate and review on iTunes as well. And enter our second annual InvestTalk Market Madness competition. It is underway. And if you enter and play, you could win $1,000 by showcasing your investment skills. Registration closes on March 17th. And if you need help understanding your portfolio dynamics and your risk tolerance level and whether they are likely to meet your investment goals, head over to investtalk.com and schedule a portfolio review with me. Independent thinking, shared success. It's InvestTalk. Good night.